just a while back, the US Central Bank, which is Federal Reserve, has announced an increase in its bond buyback program from $2 billion a month to $4 billion a month. What does it whole means? In a layman's language, the Federal Reserve will be buying back the illiquid bonds from the open market, which is for longer term, like 10 to 30-year tenure. Bonds, by its technical nature, means that whenever government needs money, it issues certain bonds to the investors who give them money back, and in return, the government basically promises to pay a certain interest rate on the money which investors have given, and that interest, whatever the rate that government promised to give, is called as bond yield. The bond yield has been increasing for a while now because of huge US debt. So it has, until yesterday, the bond yield have risen to 5.3%, which was around 24-year high. So to control that bond yield, they have announced this bond buyback program in which they are be going to the open market and buy the long-term bonds. Currently also they buy back, but the amount which they were used to buy back every month was around $2 billion. Now they increase it to now $4 billion. That's double the amount. So what will happen with that is that the bond price will go up, or the demand for these bonds will go high, and then the bond price will go up. And since bond price and bond yields have inversely relationship, so bond yields have come down. And this is immediately the reaction was seen. The bond yields, which were at 5.3%, have now come down to 5.18%. So already fallen by around 2% or so. The another fact is that it has given a legs up to the equities and the gold market and the silver market, because the riskier assets like equities and the gold have now had legs up because they believe that government is now taking action to control the interest rate rise in the market. So government intervention is a sentimental step, not a macro step. It's just an intention to show that we are behind the economy and we will do whatever it takes to cool down the yields and support the economy. This will definitely have to have some impact on the equities, including India as well, tomorrow. Let's see how it goes. Let's see for next 24 hours how the markets absorb this news and nuances behind the news. So just keep an eye on the bond yield. If bond yield cools off further, it will be a positive for the markets, equity markets. If bond yields again start to rise, that means the effect is still not there as what market expected. Thank you very much. Have a good trading day tomorrow.